with the research analyst at the FDC, Mayowa Ige. Good afternoon, Mayowa. Thank you for joining us on the program. Now, what impact do you expect this vaccine breakthrough to have on global commodity markets and, by extension, the Nigerian economy?
Good afternoon, Lucy. The vaccine is a very welcome news as a spark hope for global economic recovery. But then it's important to note that this vaccine will still not be readily available to a large percentage of the global population in the next 1 year. And also, there's most likely going to be funding gaps and distribution challenges in emerging markets like Nigeria, Brazil, where a sizable amount of commodities are produced. And then, despite the Biden win, with the high valuation of the US dollar and low federal interest rates, we still expect to see a weak US dollar in the medium term. And because the dollar is the benchmark pricing mechanism for most global commodities, what this means will be that commodities will now become less expensive to other currencies. And so we will see an increase in demand for commodities globally, and this will lead to an increase in price of commodities globally. Looking specifically at certain commodities, let's look at oil, for instance. We're going to see an increase in oil prices. We've already started seeing it. But then it's still not going to be as high as it was pre-pandemic, because the pandemic has already had a lasting impact and by changing the way consumers and employers behave. And then looking at precious metals like gold, silver, platinum, we're already seeing and we expected to see a sharp drop in prices. But then this will most likely be a short-term occurrence. Looking specifically at Nigeria, talking about Nigeria specifically, high oil prices would mean high revenue for us, high foreign exchange earnings for us, and with the weak dollar, which will mean an increase in global commodities, we expect to have higher revenues from our top exporting commodities like cocoa beans, sesame seeds. And with the weak dollar, also looking at our cost of debt, we expect to see a lower cost of debt and imports with the weak US dollar.
All right. Now, according to you guys at the FDC, Nigeria's inflation is expected to jump to 14.5% when the October data is released. Of course, food inflation is projected to go as high as 17.05%. What does this mean for domestic commodity prices, especially as the festive season is just around the corner?
Well, the inflation we currently see in Nigeria is largely supply-side driven, more supply-side driven than demand. And when we supply chain distributions, lingering supply chain distributions, high logistics costs, forex rationing have been factors that have driven inflation in the past few months. And these factors are most likely not going to be resolved before the end of the year. And with this, based on this, we expect that prices will most likely keep increasing as the festive season approaches. However, this increase in price will most likely be lessened by low demand, as there's been a drop in disposable income generally in the country.
But apart from domestic inflation, border closure and import restrictions have had an impact on the price of rice in the local markets. We see a bag of 50 kg now selling above 31,000 naira. Of course, this is a commodity whose demand peaks during the Christmas season. So what are your expectations for the price of rice in December?
Rice is a staple during festive seasons, so we expect that the price will continue to trend upwards like other commodities. And then the reduction in supply, which was caused by the floods in Kebbi, which wiped out like 25% of our expected harvest this year, will most likely support this price trend. And then if you look at the demand side too, we would probably see less demand of rice too, because we still have social distancing measures in place in the country, and this would largely reduce the amount of activities we have during this festive season. And so this would reduce the demand of rice that we would see in the festive season this year. It will most likely not be as high as it was in previous years.
Thanks, Mayowa Ige, research analyst at the FDC. Thank you for your input on the program.